right. Welcome, welcome. I see Amy jumping into the webinar. Sorry, I'm a minute or two late. Right as I was launching the computer or the Zoom, my computer was like, time for a reboot. And I was like, of course it is. So, let me pull up today I don't have any presentation. I don't have a presentation per se. I do have a couple of guides that I wanted to share and go over. There are some resources coming online that I'm excited to get back from our graphic designer folks. And we are going to I'm going to share those things. So, perfect. All right. Well, we are hosting, this is the December tax strategy, make taxes fair tax strategy workshop, open office hour. And today I'm going to be talking about year-end tax moves. So we're at year end, got tax returns kind of coming. I'm going to move this basket. So sorry. Got some Christmas stuff. Christmas stuff happening in the background there. So thanks for being here. People always ask, they're like, hey, year-end tax moves, what do I need to do to optimize my taxes? So today we're probably going to keep it fairly short, but I'd like to share my screen. And like I said, we've got a resource coming online with this one. But there are 6 things that you can do before year end. Prepay expenses using IRS safe harbor. So people ask, they're like, okay, what can I do to pay less in taxes? Well, clear the deck, examine your invoices and figure out, are there anything that you need to outstanding payments you need to make or vendors you need to make payments to. I know we're writing a check to our marketing feller for some work that he's going to be doing for us in the Q1 of 2025. So you can prepay, and the IRS has what they call safe harbor rules. So what that means is you can't write a check in 2024 where the expense goes into 2026. Has to be for 2024, 2025 calendar year. So you can't go more than 12 months out. So effectively, rent, you could prepay some rent expenses. You could prepay, I have an attorney that we're working on some trademark type stuff. And he was like, hey, we got to file an application. So there might be a check that I write for $1,500 to kind of cover some of his bill for January that he's going to be doing some work on. But those are the kind of nuts and bolts of that trademark or the safe harbor is you can't prepay an expense beyond 12 months out or that goes into the following calendar year. So you can write a check for payments that go into 2025, but 2026 you can't. So that's an easy way to capture some additional write-offs. I'm going to monitor the chat, see if you have any questions. So that's an easy way to kind of capture some additional write-offs and make some expenses happen to reduce your 2024. So if you're on top of your numbers, you can write some of those things off. You can also with your landlord, and in the resources we have that's going to be, I'm hoping, available today. So I'm taking a note of who's in the webinar today. And when that comes available, I'll drop an email out to you with that, with this guide. Right now, we're just looking at it in the down and dirty Google Doc method. But you can write to your landlord if you rent a physical space for an office. You can prepay some rent in that regards and get some rent out to your landlord. But you're going to want to make sure that you kind of chat with them because that could hit them negatively on taxes. So the kind of checklist or action here is examine any bills that are coming due. See if you see anything that you can legitimately prepay, any subcontractors or vendors that you owe money to. You can clear the deck of their invoices for this tax year. Again, you can't prepay like if you have a subscription that's a I have a subscription that's a 3-year subscription. And I can prepay that subscription for 2025, but I can't make those payments go into 2026. So pretty clear cut. You can also stop billing customers, clients, or patients. So if you have people that you're invoicing out and saying, hey, I want to collect some money from them, you can stop billing them and just say, hey, I'm gonna hold on to that invoice and not send that out. Now, if you're on an accrual basis, right, this assumes you're on a cash basis, taxpayer. If you're on an accrual basis, and you've already if you've already earned that income, you've completed the work on an accrual basis, you would need to book that as income, and then book your accounts receivable. But when you've earned the income under accrual, that doesn't apply. But if you have some invoices you can delay sending out until the beginning of the new year, you can also do that. That one's a pretty quick and dirty one. You can buy office equipment. So if you examine, vehicle purchases happen a lot in the last quarter of the year. Buying office equipment is something that you can do if you need to restock. Hey, I need paper. Look at the supplies that you have on hand and say, do I need paper? Do I need, is it time for a new office chair? I think the one I'm sitting on, the other day I was like, could I use a new chair? Those types of, they're smaller, but they add up over time. So sometimes if you have higher costs, like if you say, hey, it's time to upgrade desks or some minor equipment, you can 179 instead of having to depreciate that. The fourth one is using your credit cards correctly. So keep in mind, again, we're talking about cash basis taxpayers. If you're a single member LLC or sole proprietor, the day you charge a purchase to your credit card or personal, if you're Schedule C sole proprietor, is the day that you can deduct that expense. If you operate as a corporation, that card needs to be titled in the corporate name. It can't be your personal, right? So keep in mind that, again, if you have some expenses or you can prepay some marketing expenses, or hey, I'm going to need that here very soon at the beginning of the first quarter of 2025, and you don't have necessarily cash on hand, or let's say you want to keep the cash on hand for upcoming other bills, you can charge. I always say be judicious about that. I'm anti-debt, right? Not to the Dave Ramsey experience or level, but anti-debt, but debt can be leveraged the right way. So if you have expenses, supplies that you need to buy, you can use your credit cards and it counts as a deduction for 2024. So again, be judicious on that. This one is kind of interesting. Don't assume you're taking too many deductions. So clients that we work with are not necessarily, we're optimized on deductions. We like deductions. Sometimes I encounter people, they're like, I don't know, I don't want to claim that. You always should claim every eligible expense that you can. So, now's a good time to review your transactions. Make sure that your bookkeeping is accounting for that credit card. You'd be surprised how many people are like, oh, I forgot to include that credit card in my bookkeeping. So you want to make sure that you include those. And if you're in a startup phase on a company, we don't work with this scenario very often. But if you have a business that's in a net operating loss scenario, don't be afraid. If you have legitimate expenses that you need to make them, right, in the effort to make the business profitable, and expenses that you need to incur. But net operating losses can carry forward to future years. The last one is kind of dealing with your qualified improvement property. So QIP, or qualified improvement property, is any improvement you make to the interior of a building that you own that's non-residential. So it's got to be commercial. So if you make improvements to the office, to the building, non-residential, and you place it in service this year, you can immediately deduct through 179 bonus depreciation and then maker's depreciation. So that could impact you if you have a physical space and, identifying, hey, is there any job that I can complete, work that's being done in my office that I can complete and get that placed in service date, meaning the project is done and you can now utilize that aspect of the remodel, if that makes sense. So those are some kind of quick and dirty. The biggest one is, prepaying your expenses using the IRS safe harbor rules, not prepaying expenses that bleed over into 2026. So keeping it within that 12 calendar month window. The old saying is, the best time to plant a tree is 20 years ago. The second best time is right now. At the end of the day, you definitely, optimizing your expenses and making sure you have all the appropriate write-offs is mission critical. Any questions on that? I haven't seen anything pop up in the chat or any people asking for any clarification on anything, but I'll keep an eye on Q&A or the chat to see if there's any questions there. While I'm waiting for anything to roll in, I want to pull up the next resource, which is something I'm very proud of. I see a lot of people put out end of year, like what I just reviewed, which that's in its draft format. I see a lot of people put out, CPAs and accountants put out end of year tax strategy, last minute moves, things you can do. But I have yet, other than the one that I'm going to show you right now, to encounter a beginning of the year tax optimization guide. Since we are crazy to believe this, but what, 20 days away from the end of year? Where did 2024 go? I have created, and again, I'm hoping that today I'll be getting back the pretty version of this. So here are things to be thinking about at the beginning of 2025. So welcome to what I believe is the first that I've found, and I Googled it up to see if anybody else has done something like this. Here's the first beginning of year tax moves optimization guide. So number 1, 6 easy wins to start your 2025. Review your business structure. Review your legal structure. Well, in my opinion, like I just got off a consultation with a fellow who he's a C corporation and hasn't been anything other than a C corporation for a long time. And we were like, hey, he needs to segregate out a line of business. He's kind of commingling 2 lines of business. So we need to set up that second line of business as a LLC. Probably remain an LLC for him in that case, but he needs to also make his C corporation an S-Corp, make that S-Corp election. So just because you have a legal structure doesn't mean that it still could be the optimal one, but it's good to review that on an annual basis and just make sure that your legal structure is the right kind of legal structure for your business. If you're not an S corporation, like an LLC or a C corp, that could apply to you in the sense that maybe it's time, when you do this review, it's time to make that S corp election, right? So that's something important to kind of pay attention to and look at. The next thing is, and I'm going through these kind of quickly because I want to make sure I cover the content, maximize your retirement contributions. So I like to help people get away from big check syndrome, meaning if your goal is to put away in your retirement account, let's say $20,000, and that's the example I give here. If your goal is 20 grand and you say, okay, over the next 11 months or the first 11 months of 2025, I'm going to chunk out and get like 16 or 17 grand in there, right? Maybe you don't fill up the tank all the way to the top, or maybe this is an HSA that you want to fill. if you can get that goal substantially completed by, October, November, now you've optimized that strategy and you kind of budgeted along the way, set aside some money cash flow wise to achieve that goal. Because otherwise, you get to the end of the year and you're like, I've put nothing into my retirement account. 20 grand's a lot of money to drain out of my bank account, right? It's that you eat a banquet or a feast one bite at a time rather than trying to sit there and shuffle it all in all at once. So examining your retirement contributions for future planning, HSA, IRA, 401k, SEP, simple, those types of things. Uh, Spot check that at the beginning of the year and say, you know what? Put $1,000 a month into that. Maybe you only get 750 a month, like cash flow is, you have a lean month or you're not quite into your season. But if you can fill the bucket during the year incrementally, now at the end of the year, you're like, or even in January, if you're in a case where you're like, hey, I can still make contributions in January or February for the prior year. What's the easier check to write? A check for 4 grand or a check for 20 grand? $4,000 is a lot more palatable of a check to have to drain out of my bank account to commit towards a strategy, right? So be proactive at the beginning of the year and kind of set your intention for the year. Another thing you can do at the beginning of the year is organize your tax documents and records. I have yet to meet a business owner that is spot on 100% perfect at their record keeping, right? So re-energize, recommit, and say, hey, at the beginning of the year is a good time especially as you're getting ready for tax filing time. Now's a good a time as any to say, hey, I'm going to recommit to putting a system in place for capturing my receipts. What I recommend is, getting yourself organized. One, fire yourself as a bookkeeper. If you need a reference for a bookkeeper, we've got several amazing people that we refer out that work to. Fire somebody that, or hire or place somebody in that seat that loves to do that. I'm not a person that loves to do my bookkeeping. That's why somebody else does it, because it gets done and frees me up to do the highest and best work that I'm good at, which is not the nuts and bolts bookkeeping. But having a system in place to keep track of your receipts, your invoices, and other documents, that's key. I got a call years ago when I owned a Jackson Hewitt tax service, and a local radio station called and got me on the phone and said, hey, can you give us some tax tips that we can play on the radio? How do people pay less money in taxes? I was like 27, 28 at the time. And I said, it's not sexy. You're not going to like this answer, but the honest answer is tax savings start with good record keeping. And if you can keep better records, you're going to keep better tabs on your deductions. You're going to understand your inflow and your outflow better. And that is what helps you that's a starting point of optimizing your taxes. So I always recommend getting a handle on your bookkeeping and your record keeping. And if you're setting those New Year's resolutions, no better time to say, hey, I'm going to revitalize and get back to that. The next thing you could do in your your beginning of the year tax optimization is you can evaluate your employee benefits packages and say, hey, if you're a corporation, an S-Corp, a C-Corp, or an LLC, what are the fringe benefits or what are the employee benefits that I can offer both myself as an employee of my own corporation or to my employees, right? What are the tax optimized things that I can do to take money out of my business tax free? No time like the beginning of the year to set the table and say, oh, I forgot I could do. I had a conversation with a gentleman yesterday, and he has implemented a employee reward system where you can give an employee up to $1,600 per year. Well, he got that into place and he remembered to do that. And guess what? He was able to help his employees at Christmas time by giving them up to $1,600 each of tangible stuff. It's got to be tangible goods. It can't be cash or cash equivalent. But because he was up on the fringe benefits and what he's allowed to do, he was able to optimize that. Then we went a little bit further and dove deeper into employee benefits. And we reminded him, hey, if you have an employee or employees that need childcare, you can give an employee, reimburse them up to like $5,000 per year. And he's like, oh, that applies to two of his current employees. So we revisited that, and he was at a place where he said beginning of the year, he's going to be looking at increasing compensation for his employees across the board, cost of living raises and such. And I was like, if you do that one won't cost you payroll tax dollars, and you can reimburse them tax free. So it won't impact their income taxes, and you still get a write off. So the value of reviewing your employee benefits and what you're able to give either yourself as an owner of the company or to employees is incredibly valuable. We have on and in the resource, it'll call out, but on our website right now at maketaxesfair.com, we have a resource around employee fringe benefits. So attract, retain, and reward employees with tax-free fringe benefits. So it's really beneficial to review something like that, or if you're a client of ours, have a conversation with us, and we'll say, okay, what's going on with your fringe benefit situation, and let's refresh. Repetition is the mother of memory, right? The more times we hear things, oh yeah, I didn't remember that. Now it's time. Now I'm in a position where I want to implement that. So again, the beginning of the year is a great time to do that. Um, last thing is, and if you're if you're not working with us, but I always say, getting a custom tax strategy roadmap or refreshing at the beginning of the year is a great time to refresh what you should be doing for the year. Sure, you can optimize at the year end, but at the end of the day, the beginning of the year is the best time to say, okay, what do I need to be doing for my business to be tax efficient? Uh, the clear edge framework that we operate in is tax credits. So credits, what tax credits are you eligible for, or should you be claiming? Legal structure, optimizing your legal structure. Employees, how do you attract, retain, and reward employees, including yourself as the owner of your own corporation? Accumulation of wealth and retirement planning. Like, we've hit some of these things. We talked about legal structure. We talked about fringe benefits for employees. We talked about accumulation of wealth and filling up the bucket for retirement planning. Those are all good things to be thinking about right now, and at both a year end and at beginning of the year. Say, what can I do to make my 2025 a better year? What can we do to increase our incrementally increase our efforts to legitimately keep our money in our pocket? The other things in the Clear Edge framework is the exit planning conversation. So if you're planning on exiting your business, how do you keep Uncle Sam from being a majority stakeholder? Deduction optimization, right? We talked about prepaying expenses and those types of things for year end. That's all part of the write-off category, the deduction category. Getting organized and obtaining efficiency, record keeping. There's no wrong time to say, hey, we can do better at keeping our records. So those are some beginning of the year type activities that you can be doing. I recommend putting some brain power around those. The last thing is that I wanted to share. So I'm going through this a little bit quickly because I want to see if there's any questions. There is the third guide that we are producing. And again, I'm hoping to get this back from our graphic feller later on today. But the last thing is the Make Taxes Fair guide to getting your taxes ready to file. So what are the things that you can do to optimize as you're finishing out the year, prepaying expenses, capturing any supplies that you need to capture just to bump up your deductions out a little bit to kind of get the edge over the government, and then getting ready for the new year, putting some thought and brain power around, hey, retirement contributions, how do I want to fill those buckets up? Deduction optimization, make sure your record keeping is accurate, those types of things. But now getting ready to actually file your taxes, because Congratulations, we're at year end. Tax season and tax filing is right around the corner. So the first thing is knowing your deadlines. If you have a corporation, do you know your S corporation tax return is due? Uh, Chris, wake up, March 15th, right? So April 15th is the personal deadline. March 15th is that corporate deadline. Uh, you want to make sure that you're aware of those deadlines and that you're working to get your information and data trued up and to your tax professional sooner rather than later. So that's the first kind of knowing deadlines is key. The next one is gathering all the correct information, right? So knowing what it is that you need to gather. And I would say right now at year end, because we're not quite into the year end, if you're issuing 1099s, if you are someone that has 1099 independent contractors, um, right now would be a great time to review and run a report for what have you paid those independent contractors January through November, right? We're at December 11th as of the date of this webinar. So now would be a great time to review, hey, do I have their W-9? How much have I paid them January through November of 2024? Pop out an email to that vendor, to that contractor, to that person that you're going to issue that 1099 to. Say, hey, Jim, hey, Janet, I just wanted to confirm my records indicate that here's the report that I ran for payments that I made to you. I also wanted to confirm that the W-9 I have is accurate, right? You haven't moved, you have no, this should not be sent to a new address. What that does is that verifies their information, verifies that you have all the information. It's easier if you're like, shoot, I don't have a W-9 for that person. Well, now's a great time to start hounding them for that rather than 2 days before the deadline of, in January when you have to file that 1099. And it's a great opportunity to give them the report and say, here, January through November, here's what I paid you. Can you just spot check me and make sure I haven't made an error, right? I'd love to catch the write-off, but if I've overstated that, let me know. That gives them a chance once you, if they don't respond, or if they do respond, oh yeah, that looks accurate. Now you just update the numbers with the December number of here's what I paid you in December. Bam, you're ready to issue that 1099 like spot on at the beginning of January. So why wait until the deadline? So know your deadlines if you have W-9 or 1099 issuing that you need to do. So make sure that you have those. And then W-2, make sure you review your W-2s. If you have W-2s that have been paid out, make sure that you understand and know the deadlines that need to be associated with those, so you get those out in a timely manner. That falls in with the quarterly payroll. And then maximizing your deductions. I'm not showing you the guide here. I'm just reading it off to you. That the draft version of that is not as pretty as the other one. There's some markups and notes to my graphic designer. So I'm not going to share that with you. But at the beginning of the year is another great time to say, okay, let's maximize our write-off. So make sure that we're capturing everything. Make sure you've got those credit cards. If there's a credit card that you forgot about to include into your or line of credit, something to make sure that you captured those expenses. Another thing at the beginning of the year that is a really solid start of the year process is to really fine tune and true up your automobile usage, right? If you are not keeping a mileage log of your vehicle, now's a great time to start. Again, best time to plant a tree is 10 years ago. The second best time is right now. So it is what it is. The past is what it is, but starting a mileage log or using a mileage like Mile IQ, something like that to start keeping track of your vehicle usage is another great thing to do. Also, quarterly payments. So if you've made estimated payments during the year, quarterly payments that you've put out, now's a great time to go back and trace those out and make sure that you accurately have your estimated payments made and recorded. So knowing and communicating to your tax professional, hey, I made quarter one, quarter two, quarter three payments on these dates for these amounts, and here's the canceled check, or here's the bank transfer, or here's the printout from the IRS website where I made the payment online. I see this all the time where inaccurate information gets sent to the tax professional, and we can only report on the tax return what information we receive. So there's a common mistake is that taxpayers or clients don't give us the correct information to plug into to match up with the IRS record. So verify that you have the right payment and quarterly payment information there, and communicate it to your tax professional. Those are kind of some things. There's going to be that tax getting ready for tax filing guide as well that we're going to release. I've taken a screenshot of who's in this webinar, and you're registered. We'll be getting these out to you in an email once those pretty versions are available. But those are some end of year guide concepts, tips, tricks that you can do to optimize your taxes now. Beginning of the year, so January, let's set the intention to be more tax optimized for 2025, and then how to get ready for your tax filing, kind of tips and tricks. So with that being said, any questions? I went through that fairly quickly, but are there any questions, comments, or observations? If there are not, right now we are talking about in our school community. If you're not aware, we have a free tax savings community. I'm going to put the link in the chat. But if you go to school.com/tax strategy focus system, so in our school platform, or in the school platform, I put the link in the chat, there is a free community that we've put together that we are growing, where we are going to drop, I'm going to drop the webinar, the recording of this webinar, into that community for a replay. That's where you'll find that. And the resources that we are talking about today, the guides, will also be available in that platform as well. So we're dropping out information on a almost daily basis in tips, tricks, tools, things that you can do to optimize your taxes, as from things as simple as, hey, what's tax deductible for my business, all the way up to like, what's an exit strategy for my business, like something called the deferred sales trust, and how does that work, right? We have somebody that's exiting their business for almost $90 million, and through that deferred sales trust process, we are helping them save north of $25 million in taxes. So quite a chunk that they're not going to give to the government as a result of structuring their exit. Now that's a big exit, but we're helping another fellow who he's exiting his business for about 5 million, and we're going to help him keep about $900,000 in taxes in his bank account rather than giving it to the government. So invite you to check out the free school community platform that we have there in the chat. If there are no questions, I'm going to say thank you for being here. We went through some quick and dirty year-end tips, tricks, and ways to start your 2025 tax in a tax optimized way. We are going to be getting those guides, like I said, if not today, the pretty version, I was trying to have them ready to share today. But our marketing guy is also busy at year end, so we're unable to make that happen. But those resources will be emailed to the attendees here today, as well as put into our free community. Hope that you found this a little bit valuable. And if we have not talked, would love to connect with you and see how we can help you save money on taxes. And I see a few familiar faces in the group, so thank you for being here. and can't be good, be careful. And remember, friends don't let friends overpay the government. So if you found this useful at any level, please share this resource, this tax strategy webinar that we do on a monthly basis, or working to do on a monthly basis, with your friends, because this is free to the planet if you're self-employed. And we believe that friends should not let friends overpay the government. Thank you, everybody. Merry Christmas. I hope you all have an amazing and safe Christmas and a happy new year. And bye for now.